tagal mag-record. Ayun. Okay, so we start with Unit 2, Trade and Other Receivables. Specifically, we start with overview of receivables. So for this discussion, our objectives to discuss definition, characteristics, and classifications of receivables, the recognition criteria, accounting measurement, FS presentation, and to solve a sample problem. To start with our discussion for definition, characteristics, and classifications, we answer the question, what is a receivable? Can anyone guess or make a hunch kung ano yung word na can be associated with the term receivable? I know you are familiar with receivable, but to further understand the term receivable, you can associate it with other terms, more simpler terms for receivable. Okay. Someone said collectibles. So that's correct actually. The most common term that is associated with receivable is collectible. If you have undergone, if you have gone through reference materials, the same terminology that you're going to encounter as a term to be associated with the term receivable. So to answer what is a receivable is simply collectibles. Simply means collectibles. Okay? In all aspect, layman or in accounting term, it simply means collectibles. But for accounting, there are several definitions that you can read from other reference materials. But I define receivable as financial asset arising from contracts that gives a company a right to collect cash in the future. Now, we're talking here of financial asset. If you can still remember what I have told you under cash and cash equivalents, financial assets are cash. However, that doesn't only focus on cash items. There are still other criteria wherein financial asset fits. So for example, for receivables, these are rights. Rights to collect cash in the future. So under PAS 32, paragraph 11, as provided by that standard, receivables could be financial asset because of that criteria. Okay? So other than cash, receivables are financial asset also. Receivables are not cash, but they can be converted into cash. Same with cash equivalents, but in contrast with cash equivalents, receivables are less liquid. They are liquid, but less liquid than cash equivalents. Both are convertible into cash, pero mas highly liquid yung cash equivalents. Okay? So again, take note, receivables are financial assets. They arise from contracts, so at least there must be two parties or persons involved in order to have contracts, and through that contract, receivables may arise. Why at least two persons or personalities or parties? Because the other one will have the liability and the other one will have the asset. So if we're going to look the side of the basic accounting equation, if you're going to go back with the basic accounting equation, assuming equity is 0, asset is equal to the liability. Because in contract, someone will have the right to receive and someone will have the obligation to pay. So we are talking with asset, so the receivable, and we're talking on the other side, the liability, which is the payable. So a receivable cannot arise in one-sided perspective. Usually it is on a two-sided perspective, right? So financial asset arising from contracts, the other one should have the right to receive cash in the future. Actually, what was provided under PAS 32 paragraph 11, to be more specific, financial assets are those contractual rights to receive cash or another financial asset in the future. Parang ganun yung pinaka complete definition ng financial asset sa criteria na yun. However, if we're going to relate it with receivable, since receivable are collectibles and can be converted into cash, we may refer it to the right to collect cash in the future. Okay? Nagets ako, guys. Kindly raise hand kung nagets. Okay. So I really hope nagets talaga ako doon. From the definition, we characterize naman receivables. So just basing on the definition that I have provided to you, so receivables are financial asset. As to be specific, the accounting standard that we can relate with being a financial asset of a receivable is the IFRS 9 or PFRS 9. Now, being a financial asset, receivables are specifically regarded as financial asset at amortized cost. If you're going to read articles from big firms, like from audit firms like Deloitte, SGV, ano pa ba? KPMG, PwC, receivables are classified as amortized cost financial asset. Okay? Actually, trade and other receivables is termed as loan and receivable for other FS presentation. So depende yan on the financial statement presentation of an entity. Right? So take note, as a financial asset, but as provided by IFRS 9, they are amortized cost financial asset. Yan yung pinaka, what do you call this, the business model or on how an entity accounts for its trade and other receivables. Then contractual in nature. As I have told you earlier, at least two parties are involved in that contract. Contractual in nature because in fact, they arise from contract. Contract under Oblicon is defined as agreement between two parties, di ba? Okay. There is a contract if they agreed to have that contract. Depende na si contract if it is oral agreement or written agreement. Oral means word of mouth. Okay? Word of mouth. Parang ganon. Then, right to collect cash in the future, it is the resulting right for one that are involved in the contract. So someone in that contract, the other party will have the obligation and the other one will have the right to collect cash in the future. So that is the characteristic of receivable. Financial asset because of IFRS 9, contractual in nature because they arise through contract, and it is a right to collect cash in the future. Okay, so we have been talking earlier about the contract. So contract is actually referring to transactions. Contracts, transactions, contract may be regarded as the transactions, or the transactions will be regarded as the contract in which the receivables will arise, right? So usually it arises from blank transaction. So in the picture that I have presented, I know it's a meme. Okay? Sabi dyan, seller, ready favor. The buyer is asking favor from the seller. The buyer wants to buy pero wala siyang pera. The buyer is asking if pwede bang umutang. There is a specific terminology that wherein utang could be related. Receivables are arising from blank transaction. The blank there is referring to a specific term that receivables could be related generally. Right? Utang is one of that association on that term. Okay? For those who have watch video in YouTube or iba ko mga discussion videos, we can refer that transaction as someone has had it in the chat box actually. Credit transactions. Okay? Credit transactions. Utang, extending something or lending something or uh, accepting utang from other people is actually referring to credit. We are extending credit to someone. So for example, in a sari-sari store, if you can still remember when you are still young, in your elementary days, ba? You are being asked by your parent to go to a store. You have something in your hand, papel, 'di ba? Good for, nakalagay doon. You're asking credit to from the store owner na pautangin ka sana, 'di ba? Ganon. Okay. So doon pumapasok yung concept ng basic accounting equation that if the seller grants you the credit, you have as a buyer, you have the obligation to pay at a certain date. Then the seller has the right to collect cash from you. So si seller yung merong receivable. Okay? Nagagets ba ako, guys? Kindly raise hand. Okay, so the general contract or the general transaction wherein receivables are arising, we refer them as credit transactions. Okay? So classification. Now that we know the definition and classification, characteristics of receivable, this time, how do we classify them for purposes of financial reporting? So we classify receivables as to nature and purpose and as to FS presentation. Although what is more essential for financial statement purposes is FS presentation, is on how do we present our receivables. But for this discussion purposes, we refer to nature and purpose and FS presentation. We can have it trade or non-trade for nature and purpose. Then we can have current or non-current for FS presentation. Now, what does it mean by being trade, being non-trade, current, or being non-current? Let us start with trade or non-trade. Receivables are classified as trade or non-trade depending on the nature of your business or the nature of the operation of a business. Kindly recall the basic business concern or entity concern ba yun? Business concern yata. Business concern niya. We have the merchandising, manufacturing, and servicing. Receivables will depend if it is trade or non-trade on the main operations of an entity. So if an entity is on a merchandising concerned business, then receivables are arising from the activities that engage with the customers. The same goes actually with manufacturing. The only difference is that on how they operate. Manufacturing, the customers of the manufacturing as concerned entities are the yung mga buyer of wholesale products, parang ganon, retailers. Okay? Or sometimes the manufacturing entities have distribution aspect, parang ganon. Then for service concerned, we have yung mga barbers, ganyan, those who are rendering services, massage, and ano pa ba yung mga services? Housing improvements, office repairs, parang ganon. Those who are offering services. So, based on their own day-to-day or ordinary activities, trade receivable will arise. Non-trade receivables also will arise depending on how they transact with those clients. Now, we consider it as coming from trade or trade receivables if arising from trading or selling of selling activities, either referring to goods or services. Meaning we are referring to activities when customers are involved. So other than that, other than those activities that involves with customers, we can say that they are generally non-trade. Okay? Generally non-trade. Now the question is, sir, what if, for example, uh, let's have an example for merchandising. So for merchandising, we are selling goods, di ba? Therefore, receivables that arise from selling of goods are considered as trade receivables. Okay? Trade receivables. The question is, how about if I uh, sell my old equipment? I am a merchandising, I sell my old equipment. I have sold my old equipment to other parties. Would that be regarded as trade receivable? Generally, no. Because um, though it is part of my business, it is not part of my normal activity, normal business. Yes, the equipment is essential to my business, but it is not uh, something that is really ano engaged with my day-to-day business. Ginagamit ko lang siya, pero hindi siya yung binebenta ko. Hindi ko naman binebenta yung equipment ko eh. I'm using it for my business, but I'm not selling it as part of my business. Okay? Nagigets ako, guys? Nagigets?
Yes, sir.
Okay. So other than selling goods to customers, other receivables will be regarded as non-trade. But the question will now would be, sir, what if I am a dealer of equipment? Di ba? I am a dealer of equipment. Should selling of that equipment be regarded as trade or non-trade? This time, because your activity is referring to dealership of equipments, it could be considered now as trade. Diba? Okay, that's correct actually, trade. So mag-iiba yung perspective mo for trade or non-trade depending on your specific activity. Always take note that in accounting, we are only talking for ordinary and incidental activities. Your ordinary activity as merchandising is to sell goods. Okay? Other than that, could be considered as incidental activity. So if you are a dealer of machine, then it is a trading activity on your part. Another question, you're a dealer of equipment. What about if you sold or you sell your um, old equipment that was used to manufacture those equipments that you are dealing, di ba? So this time it will be considered as non-trade. A good example is, I'm not advertising. A good example is um, car companies like Toyota, di ba? Toyota is involved in dealing with clients buying their cars. Cars could be considered as a machine, di ba? Or sometimes equipment. Meron, di ba? Now, question. Yung pagbebenta ng cars, yung mga models ng new models or brand new cars, they are considered as trade, right? But what about the selling of the equipments used to manufacture those cars? They are considered already as non-trade. Nagigets? Okay. Kindly raise hand if nagigets ako doon. So, okay. Yan yung basic na explanation on how to differentiate trading activities from incidental or non-trade activities. So for example of trade and non-trade receivables, we have yung trade accounts receivable, or sometimes in a problem solving, what is presented is simply as accounts receivable. Usually, accounts receivable are arising from transactions with customers. Then we also have trade notes receivable. Trade notes receivable are commonly short-term in nature. Then we have installment receivable, which refers to installment sale. Okay? If we are engaged in selling properties or merchandise that are uh, to be settled in installment basis. Example niyan, yung home credit. Example niyan yung home credit. So yan, always referring to receivables from customers. So trade receivables always referring to receivables from customers. Then for non-trade, we have loans, we have rent, royalty, interest, dividend, then receivable from employees, receivable from associate and subsidiaries, claims related to loss and damages. Example niyan are insurance. Then bonds receivable, actually bonds receivable are regarded now as investment. So why those receivables, item of receivables considered non-trade? For example, yung loan, di ba? If you are a merchandising concerned entity, activities that may arise tawag nun, trade receivables are those activities referring engaged with customers. Sir, what if a customer, okay, it is a customer ha, it is a customer, hindi siya umutang with regards to the uh, goods that customer purchased. The customer asked for a loan. Customer yan, pero yung the customer asked not for a credit referring to the purchased good or purchased goods, but referring to a loan. Umutang talaga ng pera. Could that be considered as trade? Trade or non-trade? Okay, correct. Non-trade. Okay, non-trade. Take note that trade is referring to selling of goods or services. So on that point, even though you are referring to customers now, you will look naman what was the transaction. Is it referring to the selling of the goods or services? If yes, trade. If not, even though you're a customer, it refers to non-trade receivables. Okay? Now we move forward. So for FS presentation, we have again current or non-current. We consider as receivable as current if those receivables are collectible within 1 year, whether considered trade or non-trade. So that means regardless if it is trade or non-trade, notwithstanding the nature or purpose of that receivable, we classify that receivable as current if it is collectible within 1 year. If you can still recall the concept under your past one, assets are considered current if they are collectible or realizable within 1 year or within the operating cycle, whichever is what? Longer or shorter? Okay. So longer or shorter? Okay, that's correct. Longer. Okay. While the definition of non-current receivables based on past one is actually referring to residual definition of non-current. What is provided under past one for assets that are realizable beyond or more than 1 year or beyond the operating cycle of an entity is considered non-trade as a residual definition for non-current. For current. Non-current siya kapag residual definition na ng current. So meaning, if that receivable cannot qualify as current, then we consider it as non-current. Usually in practice, in the practical side, the operating cycle of an entity is within 1 year. Okay? Entities follow the so-called calendar period. When I say calendar period, we start with January and ends with December. Okay? Starts January 1, ends December 31. Okay? So yan na. FS presentation, current or non-current. So for current, regardless if it is trade or non-trade. Si non-current, usually non-trade. Usually non-trade. I'm not saying that trade receivables could not be non-current. There are some trade receivables that are portion of them are regarded as non-current, especially for installment basis receivables. Okay? So examples of our current and non-current receivables we have now. For current, we have trade accounts receivable down to a current portion of other long-term receivables. Yeah. Current portion of installment receivable. Are you familiar with home credit? Oh, lahat ng familiar. So sige, you might have encountered it, hindi nyo lang naalala. For example, kung pupunta kayo sa Silicon Valley, ano, sa Robinsons North, or hindi kaya sa Celcom. Di ba yung mga nagpakapula, usually nagpakapula yan eh. Bibili ka ng cellphone, you will buy a cellphone or a laptop, tapos tatanungin, Sir, home credit? Tatanungin ka ng home credit. Yon. So sa mga nakakaalala, good for you. Okay? So si home credit, usually installment basis ng pagbayad niyan. Some receivables kasi, especially installment receivable, last for more than a year. Minsan nga 2 to 3 years yung pagbabayad, depending on the installment balance. Sometimes when you purchase, you make down payments, then the balance is for installment basis. So yan. So if there is an installment portion, you have to consider the current portion. We consider portion of the installment receivable or the other long-term receivables if we count within 1 year from December 31, the usual reporting date. So from December 31, count from December 31, if within 1 year, the realization or the collective, if the collectability of that installment receivable or portion of other long-term receivables pasok sa 1 year, then we can consider them already as current. Then the excess, non-current na. Okay? So for non-current, nandyan yung non-current portion of installment receivable. Non-current portion of other long-term receivables, yung loans, notes, and lease. Then we also have receivable from associates. Usually receivable from associates and subsidiaries, they are automatic non-current. Non-trade na non-current pa. Claims insurance to loss and damage related to loss and damages. Example insurance, they are actually long-term basis. Then bond investment or bond receivable. Yan. So for current or non-current, always consider the collectability. If it is within 1 year or beyond 1 year from the reporting date. So if your reporting date is December 31, count 12 months from December 31. Okay. After classifying receivables, knowing the definition and classification and characteristics, we move on with the recognition criteria. How do we recognize a receivable or an item of receivable? Simple concept. Receivable are recognized when and only when through a contract a right to collect cash in the future arises. Okay? Always take note that there must be at least a contract. It must not be a one-sided. It must be a two-sided contract. Perspective rather. So that's a contract. Someone will have a liability and someone will have the receivable. Okay? When and only when, through a contract, a right to collect cash in the future arises. Example, when a customer has been billed already for the goods sold by the seller or services rendered by the service provider. So yan, if you are availing the goods or availing the services that are being rendered by the service provider, okay? If you have no cash at the moment, you will be provided with the billings. Then later on, you will pay with regards to the amount of the billing. So yan. Another is when a loan contract has been signed by both lender and borrower and cash proceeds been forwarded to the borrower. So for example, if we are borrowing funds from the bank, the lender, okay, has the receivable and you as the borrower will have the payable to the bank. The next we have when the right to receive interest, royalties, rent, and dividends have already accrued. So go back with the concept of accrual. Okay? Accrual of interest, royalties, and other items. Diba? When we accrue interest, we debit accrued interest income and we credit interest income. Or sometimes our debit is a debit to interest receivable account. Accrued interest income or accrued interest income or interest receivable, they're just the same. Okay? I know, nalilito kayo sa sa accrued interest income. May income kasi sir eh. So sa income statement, i-represent. Mali. I-represent yan sa balance sheet. Okay? Hindi porket may income, hindi porket may liability, or hindi porket may expense, nasa income statement na. Okay? Tignan nyo yung prefix. Yung nauna. Accrued. Another, unearned. Diba? So, I hope nakaka-relate kayo sa pinagsasabi ko sa adjusting entries. Yung accrual and accrual method and liability method. Okay, so nonetheless. So, yan yung examples. There are still other examples in practice that you can encounter. Okay? Pero yan yung common that you can see in reference materials and other reference books. Then we have accounting measurement. So after recognizing that you have a receivable because of a right to receive, then how do we measure our receivables? That's the question. So we measure our receivables depending on what type of receivable is. Is it short-term, long-term, interest-bearing, or non-interest-bearing? So for short-term receivables and long-term interest-bearing receivables, we measure them initially at face value. The reason for long-term interest receivable or long-term interest-bearing receivable, we'll discuss it under notes receivable. Okay? So yan, for short-term receivables and long-term receivables, face value. We have already defined face value under cash and cash equivalents. But for receivables, we can add another concept for face value. Face value is the transaction price at the date of transaction that resulted to the arising of that receivable. Okay? So for cash items, yung face value is the legal value. Then for receivables, we can refer it to the transaction price. Okay? Ibig sabihin, magkano initially. Yun yung initial measurement natin. So if you have lent money, good for 1 million, then the face value is 1 million. Yun lang ibig sabihin. Then for long-term receivables that are non-interest bearing, we have it at present value. Present value is sometimes called as discounted value. Okay, what they are going to discount there is the future cash flows, your collections. Okay, you're going to discount those collections using a discount rate. For present value, we're going to incorporate the present value concept when we proceed with notes receivable. Because notes receivable, two perspective accounting that we're going to consider. Interest-bearing and non-interest bearing. Okay? Then, whether it is short-term, long-term interest-bearing, or long-term non-interest-bearing, PFRS 9 provides that subsequently, as financial asset at amortized cost, receivables will be subsequently measured at amortized cost. What does it mean by amortized cost? The initial measurement of uh, the receivable, less collections, less write-off, and less allowances for uncollectibility. Yan yung general application of amortized cost for receivables. Okay? So for example, if we have 1 million, then collections say 200,000, the difference of 800,000 will be regarded already as amortized cost. Okay? Collections pa lang yan. How much more if we consider write-off? Then allowances for uncollectibility. Write-off and allowances for uncollectibility, we can relate it under accounts receivable, which is our next topic. Okay. Accounts receivable. Write-off are referring to accounts or receivables that are 100% sorry 100% hopeless for collections, while allowances for uncollectibility, you are setting up allowance of doubt of collections, not yet 100%, but there's already a doubt. Okay, so yan, for short-term and long-term interest-bearing, face value yung initial measurement. But for non-interest-bearing, present value yung initial measurement. But regardless the type, we have it amortized cost for subsequent measurement. Okay. Next is for financial statement presentation. After considering all other concepts, from definition down to accounting measurement, this time when we report, how do we present those items of receivables, trade and other receivables? As I've told you earlier, what is most important is the presentation as to current or non-current. So for financial statement presentation, we present our receivables under the statement of financial position or balance sheet. Those that meet the definition of current will fall under trade and other receivables account. Okay, trade and other receivables account. Usually, the account title that is being used for current receivables are trade and other receivables account. So after cash and cash equivalents, provided that, assuming you have no other highly liquid investments, so from cash and cash equivalents, you can have trade and other receivables as second line item in your balance sheet. Okay. So again, current assets, trade and other receivables if met the criteria of being current. If it does not met being current, meaning residual definition na, then we can consider it as non-current, but the account title will be long-term receivables. Long-term receivables. Again, they do not meet the criteria of being current. But regardless, what will be presented to notes to financial statement are the items that composes those accounts. So for the combined amount of trade and other receivables, all the items that composes our trade and other receivable account under current asset will be presented as part of the required disclosure to notes to financial statements, along with the accounting and management policies. The same goes with non-current non-current receivables. Okay? The total amount presented under the long-term receivable account in the balance sheet, all the items that composes that item, that one line item account, long-term receivables, will be presented under the components will be presented as part of the notes to financial statements along with the accounting and management policies. So may mga required disclosures yan. Okay? So let us have an example. INTACC1 company reported the following receivables as of December 31, 2019. So take note, our reporting date is December 31, 2019. Okay. Our requirements, classification of receivables as to trade or non-trade, current or non-current. So December 31, 2019 information is useful for requirement 2, classification as to current or non-current. So we're provided with items from accounts receivable from customers down to insurance claims from loss and damages sustained. So the technique actually for answering this type of problem, we can incorporate the concept of sabay-sabay walang iwanan. Di ba? I have already introduced to you the sabay-sabay walang iwanan. So we're not only analyzing for trade and non-trade, but at the same time, we can analyze for current or non-current. Sige, how do we solve this one? So here is the analysis. For accounts receivable from customers, the 1,500,000, since it's coming from customers, we consider it immediately trade. Okay? Since trade receivables are automatic current, we can have it diretso current. So accounts receivable from customers, trade current. Okay? No other information naman provided for that item. So automatic, trade current. Notes receivable from customers, short term. Okay, there's a designation, short term. So therefore, coming from customers, automatic trade. Automatic current because referring to short term. Okay, short term. No information provided, so automatic current. Next, notes receivable from other parties at the end of 3 years. The same notes receivable, however, coming from other parties. By that alone, we can analyze it to be under non-trade. Then the next information at the end of 3 years. So that's our clue for it to be considered as non-current. So non-current siya. Next, interest receivable related to notes, 10%. So may interest receivable tayo. Usually, long-term receivables involve a significant amount of interest. Okay? We account for accrued interest. But it doesn't mean that short-term receivables do not have interest also. There are some short-term receivables. Example, yung short-term notes receivables that that involves computation of interest but minimal. Usually minimal. Yung substantial interest are actually referring to long-term receivables. However, for this purpose, interest receivable, always take note, regardless if they relate, they are considered non-trade. So automatic yung interest receivable natin are non-trade. But because receivable, yun nga, as I've told you, we have an annual or periodic accrual for interest, then we classify them as current. Di ba nga every year, at the end of the year, we set up an adjustment for accrued interest. Di ba? So we debit interest receivable or accrued interest, then credit interest income. So asset yung dinebit natin. So that is a current asset. By the way, nahabol ako hanggang dyan sa explanation. Okay. So, sige. Next. Loans receivable, 5 years. Okay, loans receivable, 5 years. Collectible for 500,000 each year starting December 31, 2020. So 5 years. Automatic our classification, classification, yung automatic natin na classification will be non-current. However, there is an additional information. Collectible for 500,000 each year starting December 31, 2020. So, we can apply the information earlier in comparison with the date provided. The date provided for our reporting is December 31, 2019. So our reporting date is December 31, 2019. Counting from December 31, 2019 up to December 31, 2020, it's approximately 1 year. So 1 year talaga yan, di approximately. 1 year talaga yan. So therefore, collectible for 500,000 each year starting December 31, 2020. So within 1 year daw, we can collect first 500,000. So out of 2,500,000, 500 is current, then the rest non-current. Okay? But the full amount of the loan of 2,500,000 non-trade. Okay? Non-trade. Next, interest receivable related to loans, 12%. The same analysis for what we have under interest receivable related to loans. It is considered non-trade but considered current. Next, rent receivable for 5 years, collectible 100,000 every year starting December 31, 2020. So counting from December 31, 2019, meron tayong 1 year. So we can receive 100,000 within 1 year. So current 100,000 and the remaining 400,000 non-current. Okay, but the full amount of 500,000 will be regarded as non-trade. Non-trade. Okay? Next, royalty receivable. So royalty receivable, non-trade, current. Dividend receivable, non-trade, current. Receivable from employees, non-trade, current. Okay? Non-trade, current. But sometimes focusing on receivable from employees, other books will present it as receivable from employees and officers. Parang ganon. Sometimes it will be referred to as accounts receivable dash employees and officers. Parang ganon. Okay? Sometimes receivable from employees are regarded as trade if they are referring to trading activities. Usually, pag receivable from employees lang, we are referring to advances to employees or employee IOUs. Those are non-trade. But if the problem provides that receivable from employees are trade, okay, wag tayong makipagtalo sa problem. Follow tayo sa problem. Sa assumption ng problem. But because there, receivable from employees not regarded as no designation as trade or non-trade, generally we consider it as non-trade. Okay? Non-trade. Next, receivable from associates and subsidiaries. Automatic yan, non-trade, automatic non-current. Insurance claims from loss and damages sustained, automatic non-trade, automatic non-current. Okay? Mga long-term receivable kasi yan. So by that analysis, we can say that this is our computation. So for total trade, we have 3,500,000. For total non-trade, we have 10,850,000. Current, we have 5,550,000. While non-current, we have 8,800,000. As I have told you again earlier, yung most important for FS presentation is yung requirement to. Yung classification as to current or non-current. Yung trade and non-trade, maybe for ano lang yan, for management reporting. Most common kasi for external reporting or outside party reporting, yung mga ano ba natin, yung mga FS users, yung creditors, yeah, lenders and creditors and other users. So, importante sa kanila yung current and non-current classification. Reason, because they are after with the ability of an entity to settle those receivable and finally settle their obligation to those lenders and creditors. Right? Minsan kasi, when we engage with collectibles or receivables, we have a risk. Okay? We recognize risk on collecting them. So we can relate that risk dun sa mga write-off and allowances. Okay? So nagets yung ating solution. Sand, nagets. You may consider raising any clarificatory statement or ano tawag nito? Clarifications, violent reactions, questions. You have questions? So I guess for this afternoon, we're done with overview. So yun yung overview natin.